Russia to begin trading gold on the St. Petersburg Exchange. So this came out just about a week or two ago, and here is part of that article. Russia, the world's second largest gold producer after China, is to free itself from the current dependence of gold prices on the London Stock Exchange. And they plan to launch gold trading on the St. Petersburg Exchange, the SPYMEX, by the end of the year. And so one of their main objectives is to form a competitive market price. In other words, something that's not manipulated, wink, wink. So until recently, gold market participants relied on price benchmarks set by the London Stock Exchange. Now, the London Stock Exchange is going to face some competition, Mike.
Wow. One of the things that this article doesn't mention is the commodities exchange in the United States. This isn't just competition for London. This is global competition, and it's great. The more free market competition we have, the better. And there's this overwhelming body of evidence that suggests that it doesn't just suggest, it almost outright proves that the price of gold and silver have been heavily manipulated throughout the years. And, some of it's short-term manipulation by traders, and there's traders that go to jail, that have gone to jail for it. But this makes the manipulation in whatever direction Wall Street wants it to go much, much more difficult. So this is great that this is happening. Plus, you and I, when we wrote the book, we did a piece on how many more people there were that were able to participate in gold's bull market this time around. And it's about 18 times the population of what it was in the 1970s bull market, where gold rose more than 25 times its price from the beginning of the 70s to January of 1980. This is part of it. Global price discovery for gold. If somebody buys gold in Russia, they are contributing to the global spot price. Back in the 70s, if somebody bought gold in Russia or China or any of the Eastern Bloc countries, there were no markets. They could buy gold from another individual, but it did not have, it did not contribute to the global spot price. That buy or sell was not recorded anywhere. And so this is actually exciting news for anybody that's invested in precious metals.
Yes, I agree completely. And it also does signal that, the separation between East and West, which maybe isn't a good thing on its own, but what we're talking about here is certainly good for gold and for price discovery. So right. That article continues here. Blah, blah, blah. In this particular case, the United Kingdom doesn't produce any gold, but of course, Russia does, and Russia has significant reserves of the metal. However, London does have a massive repository for foreign gold, as has New York, but it doesn't own, apart from its own reserves, most of the stock that it holds. However, this gold is literally under arrest as soon as any country tries to claim sovereignty over its own gold, as the UK typically makes it difficult to transfer stocks. So not only manipulating price, but manipulating like the physical location of the physical metal. So, Russia's move here could put an end to that, or at least make it a lot harder.
Yeah, it sounds like they're a little bit bitter about things that have happened in the past. And I wouldn't blame them. Okay.
Yeah, me either. Okay, last piece from this article here. Russia is not only one of the largest gold producers, but also stores its own gold in Russia. This means that Russian gold purchases for storage in its own reserves, instead of storing currency from unfriendly countries, has become an important step towards de-dollarization and financial independence. As a result, Russia may be able to reduce its dependence on the prices of precious metals issued by the London Stock Exchange. So yeah, another step here toward de-dollarization and financial independence.
They also say, instead of storing currencies from unfriendly countries. And so when you're talking about central bank reserves, which have almost always been U.S. treasuries, it's U.S. dollars. And when they're saying unfriendly countries, they're talking about us.
Yes.
That's directly pointed at us. So, yeah.
It's true. This is nice.
It's
Nice.
interesting how they avoided talking about the U.S. or the commodities exchange, and they solely picked on the London Stock Exchange. Well, London LBMA, I guess, is what it would be, not really the stock exchange, but it's sort of sidestep. They're not insulting us directly, but when they say storing currencies from unfriendly countries, I would imagine that their dollar reserves, before we froze their assets and so on, their dollar reserves were much, much bigger than their British pound reserves. So, yeah, it's directly pointed toward the United States, but they're not saying the United States anywhere in the article. Very interesting.
Exactly. So that's Russia. I want to turn now to China, and it is currently skyrocketing. This chart here is Chinese gold ETF demand in the first half of 2025 has surged to the highest on record. And so this chart here, this two bars here is the first quarter and the second quarter added together. And you can see that it's a lot taller right now than it has been throughout the last 10 years by a lot. This is about 4 times higher. So yeah, demand is up massively. It says here, China's appetite for gold has never been stronger. Certainly looks that way.
Well, that's the reason that gold has had such a price rise in the last year and a half. It certainly isn't the the American public rushing in and buying, and they should be. I mean, with all the geopolitical tensions and then this one big, beautiful bill, it's just another, every president, every politician, it isn't presidents, it's Congress as well. They run for office, they promise certain things. We were supposed to get the budget deficits and deficit spending under control, and look at what has happened. It just exploded, and that explosion absolutely guarantees that your dollar is going to be worth a whole lot less in the future, period. There is no other direction.
Yeah, I agree completely. And so you get out of the dollar, you got to move into something. Might as well own something that no one controls, like gold.
Right.
So, they figured it out in China. It's only a matter of time before the Americans figure it out too. Central banks are increasingly buying gold from local mines as the prices surge. So this is from Lobo Tigre. He tweeted out here a quote from this particular article saying 19 out of 36 respondents in the World Gold Council's latest central bank survey said they are buying gold directly from domestic, artisanal, and small-scale gold miners in local currency. So that's definitely interesting.
Well, what's interesting about that is they don't have to report that if they don't want to.
Yeah.
If they're buying from another central bank, it gets reported. But if they're buying it from little miners and stuff, I mean, why do they have to report it? If they don't want to, they can sort of sidestep the issue.
Yeah. And it's just a survey. So I suppose this is them being honest because they just want to be, or maybe they're being deceptive for some reason, but I don't get that impression. Let's take a look here at another part of that article. Just continuing on here, 4 of the central banks are thinking of following suit and doing that same thing. This is a slightly higher figure than last year's survey, when around 14 central banks out of 57 said they were buying directly from domestic sources. So I saw these numbers and thought, wait a minute, that is not slightly higher. So I did the math, and 14 out of 57 is less than 25%. But 19 out of 36 is more than 50%. So we're going from less than a quarter to more than a half. This is doubling from last year. Yeah. Doubling.
More than a double. Wow. Yes, it is huge. My guess is that these are not, the first world Western countries, that this is other countries trying to front run what is about to happen globally. They know the direction that things are going, and they're getting prepared, and they may not be reporting how prepared they are. Right now, we're wielding this power of having the most gold of any country in the world. That may or may not be true at this point. We don't know.
Mm-hmm. Yeah, exactly. And the United States is losing allies seemingly daily. And some of these other countries are building partnerships. And so taken as a block, they may hold more gold than the United States. And that could be a more relevant comparison than any one country measured against the United States.
Yeah.
So yes, also your instincts were correct that a lot of these central banks are from smaller countries. There's a quote here. One trend that we're seeing is that some central banks, especially in Africa, Latin America, are starting to buy gold directly from domestic small-scale gold mines, which have really proliferated because of the higher price. So those banks, obviously, as the price of gold goes up, those mines proliferate. They mine more, and new ones come online over the course of several years. So yeah, that's definitely happening. You can make an argument that it's cheaper than buying gold on the international market because a lot of these central banks buy gold at a slight discount to the international price. So that's partly why it's appealing to them. Also, they might be able to do it in a stealthy way, as you mentioned. Traditionally, central banks acquire gold through the global over-the-counter market, typically centered in London. There's London again, where gold is transacted via major bullion banks priced in fiat, dollars, euros, sterling. So yeah, so yet another sort of separation from London. Maybe it's a coincidence, maybe not. Maybe the world more broadly is separating itself from the West.